Good morning, everyone. Welcome back to Weekly Stock Market Brief. We have a ton to talk about this week, especially the market heading down. Are we going to head lower to lower lows, or market might potentially bounce early next week? So we'll be looking at their support and resistance levels, as well as we'll be looking over QQQ and SPY, as well as the 7 mega cap tech, Meta, Tesla, Amazon, Google, Microsoft, Apple, and nvda to give us more clues to see if the market might potentially bounce. All right, before we get into the technical and charts, let's take a look at the data first. So fear and greed index, we were at 27. When it starts to get closer to extreme fear, we might start to get some buying opportunities. But for now, we'll stick with more price action and AI sentiment data as well, where it's starting to shift a little bit more bearish, right? This 37, we don't get 37s that often. And you can see historical bearish highs usually around 38. At least for the past year. And so this is not really giving us much of an edge, especially if the bull side is still in the 35s, 44s. If this starts to go to the low 30s and we start to get closer to the like 39s, then we may potentially get like a bounce in the market at the moment. But for now, still pretty even in between. So for me, next week, it will be likely to be the data. And Monday, really nothing at all. These don't really matter that much. Tuesday, core CPI and PPI is going to be the one that market's looking at, because we got that super hot job numbers on Friday. That kind of just blew out of the water. It's like a 4 Sigma move. The reason market didn't react well to good jobs numbers, even though good job number equals good economy, is because the fear of heating up more inflation, and because yields are getting close to that like 5% mark. And it was okay for like the past month or two when yields keep rising, but after it starts to hit that threshold where it's like that 5% mark, now market is not liking that anymore. So any further increase in that is going to tighten up the market. So hence I think that's why we got that sell down when we got that jobs number on Friday. So we'll see if we get really good CPI data, and PPI here might cool things off with fear for the markets, thinking that inflation might ignite. So we'll see how these come in. For now, we're looking at, what is it, 2.9. So we get in, if we come back, get something like a 2.8, then market might like that. So Tuesday, Wednesday, pretty much the key inflation data for next week. And we got some job numbers here coming in on Thursday. And Friday, really nothing for Friday. So yeah, so Tuesday, Wednesday, Thursday, check out, make sure you look for those datas. And let's take a look at charts. So on the Qs, we're kind of looking like we're looking for this falling wedge. At the moment, we did bounce off here 3 times. And this is pretty much a daily downtrend, kind of lacking follow through, right? This is initial move from this FOMC. Boom, we got that lower low, lower than this prior low. So that's a daily downtrend. And then we just kind of V-shape, right? Find follow through. And we got another lower low right here. So the question is, are we going to just V-shape here again? Or are we going to actually get follow through this time is the question. But we are in a daily downtrend. And yeah, so we are also kind of like in a 3-day, but weekly is not very clear because this is an inside bar, sorry, outside bar. So, we poked above for that weekly lower high and then we went to a lower low. But if we do break next week's low, if we pick this week's low next week, then I would count that. And interesting enough, we did bounce. This was pretty much just tagged right at the dot at this prior all-time high. All right, this is prior all-time high, and we pretty much just touched it and bounced. So if we do break here, I'm looking down closer to this $500 psychological support over here. We do have some demand zone right here, and a lot of volume traded here as well. So this area, 500 to 494, is going to be where I look for potentially that bounce. If we crack through here, right? If let's say we go something like this, and then we bounce, and then back test this and act as resistance, right? Get a lower high again, and boom, another lower low. Then I'm looking down closer to 486. But that's, let's see. I mean, anything can happen. 4%. So after a, yeah, that's gonna be a pretty drop. We just dropped close to 4.5. So if we get another 4, yeah, it's almost a correction. So once we get to the 10 for SPY, it's a correction. Um, yeah, then we're looking down closer to this level right here, back test. So those are the levels I look for as a bear. And for both, you just want to see this pretty much bounce right away, and hold this rising wedge pattern, sorry, falling wedge pattern, and then pretty much bounce back right here and see if we can break through here, and then just be a bull break with a falling wedge. So that would be what bulls will be looking at this moment. Really not much. We pretty much closed near the low of the day. So yeah, so bears, I would say, still in absolute full control at this moment. Bare minimum, right? At least give us right here. This is a big enough bounce, and so bulls want to shape up hourly uptrend. Bare minimum here. So for us to say that daily bounce is on the way, so you can get that bigger move on the daily to potentially come back up to test here at this moment. And let's take a look at SPY. So SPY is a lot more clear, right? You can see. Let's just go to the 4-hour here. I should go back to 1 hour. So SPY is super clear, equilibrium, bear break, right? Tiny image. Can't get more clear than this. And then we got a bear break right there. So we can't say this is a bear break without follow through, because we literally dropped like 3%, right? And then we broke it, and then bulls bounced a little bit. It's a big bounce, but like after a 3.5% move down, right? They bounced like 1%, right? So it's a big bounce, but it was pretty much just a back test of this equilibrium bear break, right? This level here, and then bear break, back test, reject. So that's another tick for the bears at this moment because of the back test and then rejection from there. And you can see we pretty much close over the low of the day after hours, but we closed it around here, I think, during regular hours, and then after hours it closed even lower. So it's looking a little bit bleak for that hourly uptrend. If bulls show up right away, Sunday night on futures, right, and then he bounce right away here, and then they open back above this and come from hourly uptrend back into this equilibrium, then I think bulls are okay, right? Then there'll just be a sideways range now if that happens, because we pretty much haven't. We're pretty much right. You can see this level is pretty much right above here, so we haven't really broken that. So if bulls show up right away and confirm the hourly uptrend here, now we're looking for a potential sideways range trade. But for now, it's an equilibrium, tiny range, bear break. Okay, zoom out a little bit here. So if we do if we break through there, right, we get follow through. Let's say we get follow through on Monday. I'm looking down closer to 570 to 570 zone, this level, for support, for potentially a bigger bounce. If we crack through that, right, then we're looking down this structure right here, closer to this 562 level here. Yeah, so it's 2 levels for bears and for bulls, right? As I talked about that, we need to bounce right away. And then if we do come back up, then we're looking up closer to this equilibrium tiny range resistance. So bear minimum confirm the hourly uptrend. Then we have a chance to bounce back and push and retest this 591, 592 zone. But yeah, they need to first get above this 590 zone for sure, due to this cluster of volume traded right here. And now we're below that volume. So if we come back up and reject from that volume again and we head lower, then that's another win for the bears at this moment. All right, so let's look at the rest of the mega caps to get more clues to see if markets are weakening. So Meta is still sitting at all-time highs, So really no red flags here on meta right here. As long as meta holds above its prior structure, which is this way right here, and it's acting as support, bounce off here twice, then no signs of red flags. We could also argue, what if meta rolls over with the other guys, right? Let's say this is a tiny range, and then meta, next thing you know, goes like this, and then it rolls over, right? Joins the other guys on the bear side. Then that's gonna potentially speed up a little bit more for the market. But for now, it's definitely holding up fine. So no signs of real red flags at this moment. Something like this, right? Again, a little bit rising wedge as well. But for now, no red flags. But I'll definitely make a key eye watch on it to see if it ends up breaking bear on that rising wedge. If it ends up breaking bear, then it's gonna be another tick in the box for the bears, increase their momentum. Tesla here, bulls definitely play defense here, right? End of the day, we got another drop, and market was weak, but you can see Tesla bulls held a lot better than the Qs. I got that big bounce with the Qs, and then the Qs pretty much rolled over and closed the day around here, and even weaker after hours around here. You can see Tesla bulls pretty much held this level, try to form like a bull flag on the 15-minute here. So I wouldn't say. So there are signs this may be, like a daily higher low, meaning higher than the prior low for Tesla bulls to confirm back that daily uptrend back to their favor. But bare minimum, they need to break above 426 for that daily uptrend to confirm. If daily uptrend confirms, then that's a very good sign. We're looking for that weekly bounce. This could be a weekly bull flag. So if we can confirm a daily uptrend pretty much right here, and then that break above this prior high, then this is a weekly bull flag. And potentially we can head higher. So no huge red flags for me at the moment for Tesla. But if we break this low, this 373 low, that's a continuation of the daily downtrend. Then we may look for continuation of weekly consolidation on the bigger side. Then we're looking for this 360 level, try to hold. This is the last structure. There is some support that we built, and we need this level to hold over here. All right, let's look at Amazon here. No huge red flags either. Kind of held this level as well, right? This was the level that I said if we need to break, bounce, 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 bounce. Friday bounced again, even though we made a lower low, right? We cracked through that. This is first daily downtrend confirmed, no follow through. Another daily downtrend confirmed, so far lacking follow through as well. And this low was marked pretty much at the previous all-time high, pretty much exactly same structure as the Qs, testing prior all-time high and then bounce from there. So yeah, so let's see if we get some follow through. If let's say Monday we crack through here, right, and Meta decided to do the same thing, right, breaks bear out of that rising wedge, then we're potentially looking down closer to probably this structure right here. So we'll be looking down closer to 207, and then looking down closer to this support, this one right here, a little longer term one. So we may look for this 210 or 207 area. And for bulls, you definitely want to come back up to test this 225 zone right here. All right, let's look at Google. So no, Google doesn't really have any red flags, I would say here. This was the EQ bull break, right? Tiny range right here. Bull break on Monday. Didn't get much follow through, just a double top. And then we kind of back tested right here. So now it's just pretty much a sideways trade for me. But we did bounce 1, 2, 3, 4 here. So if we crack through here, rolls over, that's the red flag. Then we're looking at closer to 180. This prior resistance right here, very clear, double top. Yeah. And if we crack the 180s, then we're going to look for back down to 168. This cluster of trade where we traded for months. And for bulls, just continue to tighten up and then try to break this double top. Yeah, no red flags for Google. Not a lot of red flags on these mega cap techs, but if they start rolling over, then market is going to be really weak. But Microsoft is definitely a red flag a little bit here. So we had this big tiny range here for a while, for many months, and we finally broke bull here, and then just being a lower high than this. So lower high on the monthly. Let's do that. So it's looking like a lower high on the monthly, and so there's a big move down. All these candles it takes months, so big move up, and then it's just a lower high. So if we start forming, we could form a monthly equilibrium. That would take forever. The market would just go sideways for a very long time. But if we start cracking through here, right, this support, all these supports, and then form a monthly downtrend, then that's probably the first time I've seen Microsoft confirm monthly downtrend since the bear market here. So that'll be a huge red flag. But that's another like what if that happens, market's probably down like 10%. So yeah, it's like another 8% in a way. So I wouldn't, count in that's going to happen, but just have it in the back of our heads at the moment. But Microsoft is definitely a lot weaker. See, we pretty much gave back all of this move. Now we're just trading back here again in this sideways range. So Microsoft is pretty much just longer term, really not haven't gone anywhere, right? If you bought it here, you're still kind of here. So really haven't really done much. Complete sideways at the moment. So Microsoft, I'll say, is a bear at the moment. See how much time I have left. Okay. So Apple. So Apple, a little bit of a red flag here as well. So let's go back to the daily, right? This whole move pretty much gave it all back. This was the ascending triangle. Bull break. Finally broke above this triple top right here, right? And we got this big follow through right there. Solid 10% for Apple is quite a bit, especially a $3 trillion market cap. And we just give it all back. And we're back to the support again. You can see, right? Bounce, 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 right there again. So I wouldn't be surprised if we get another little bit more bounce, and then form even if we're bears are going to take it lower, a little bit of bounce, not surprised, form a lower high and then get the lower low crack through there. So if we start, if we get a weak bounce next week and we crack through here, that's a bit of a red flag. Then I'm looking at this structure, this whole structure to hold. It's traded for like what, 4 months here. So yeah, a lot of volume. So that this level definitely needs to hold. If it doesn't hold, that's a red flag. I don't expect definitely a lot of support to be bounced over here. But for now, it's in a daily downtrend. But weekly, monthly, and everything's still intact. So for bears, they still need to break a lot of structures for the longer time frame on the weekly and monthly for a lot of these big guys. For now, it's mostly just the daily that we're in a downtrend. So for now, not huge red flag at this moment. This candle is kind of a red flag, right? We pretty much went to all-time highs and double topped and then sold pretty much all of it off. So that's a pretty big red flag for me. But like I said, bears need to confirm trends. So we did get a big move, right? This bears need to confirm a lower high and a lower low. So if we do that happens, right? Let's say you make a weak bounce and then go to a lower low. I'm looking back down to this 128 again. This structure has always been traded here for so long, right? Bounce, 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 bounce again. So bears really need to crack through at least this structure right over here. If they can't, we're just gonna go sideways. Yeah. So market doesn't have to drop a lot. It can go sideways for a very long time, just a correction and sideways. So bears need to form longer term structures like weekly and monthly downtrends for them to take things lower. Or this could just, like I said, bounce here. Let's say we come bounce here and then go down, and then we go sideways for a very long time. A lot of these big guys, right? So let's see if we get more follow through from the bears next week, and if any of these start to shape up longer term damage on their chart on the weeklies. All right, that's it all for you guys. Feel free to like, share, and subscribe, and check out my link on YouTube and Patreon if you guys are looking for one-on-ones and better your technical analysis, as well as learning about how to trade futures or trade anything you want. And I'll see you guys tomorrow for a commodities update, and have a great rest of you guys' weekend.